Okay, so we have our final panel discussion of the day. Thank you guys so much for everyone that is sticking with us. Now, this one you are not going to want to miss. We are diving into the world of digital asset securities, and we're going in with the honest truths. This title is called The Current State of Digital Asset Securities, a reality check. So I'm going to hand over now to our moderator for the session, David Hendricks, the CEO and founder of Vertalo, to kick it off. So David, the floor is yours. Thank you.
Hey, everybody. I promise that this panel is going to be run tightly and on time with concise and quick answers. Okay, so you'll be able to pay attention and actually learn something. So I'm Dave Hendricks. I'm the CEO of Vertalo, and I'm joined by a bunch of my old friends here. And let's bring them up on stage. First, Dan Doney, the CEO and founder of Securities. Come on up, Dan. We've got Anthony Woolley, the Chief Commercial Officer, the proselytizer for Ownera. You might know about Ownera. My friend and client, partner in crime, Arie Trouw of XY Labs. Come on up, Arie. I mean, these guys are epic giants. They deserve a little bit more than that tepid applause, okay? Yeah, there you go. If you manage to stick it out till the end, you know, come on, use your hands, get the blood rushing. Next, we've got Danielle Coheur of Tokeny. This is Danielle all the way from his yacht in Monaco. Very sly shoes you've got there, Danielle. And also, we've got, last but not least, Sam Grossman on the 50th day of his epic cross-country back and forth conference tour. So Sam's with Inveniam, and you might be familiar with Inveniam. They're here at the show as well. So what we've decided to do here today is basically a 5-question lightning round. Okay, I've given my esteemed friends and colleagues the questions in advance, and also hard stop. Okay, in very limited amount of time. So you're going to get a lot of information about what's been happening in what used to be called the security token industry. I like to refer to it as digital asset securities. You know, you can call it security token if you want. I think it's a little bigger than that. And so you're going to hear from people who've been building, selling, and implementing technology for years in this space. And they're going to tell you what the state of the market is today, what's changed in their businesses, in their outlook, in their viewpoints. So first, though, I'm going to give everyone an opportunity to promote themselves for no more than 2 minutes. Let's start, okay, with Anthony Woolley of Ownera.
Yeah, so, and those who were here yesterday would have heard a little bit from me there as well. The seed of the vision of Ownera came about from the founder. Arie Ben David actually did what he would say was the first regulated security token offering. At the time he was a partner, a VC partner, they were investing in blockchain companies. He thought, why don't I tokenize my fund and issue it as a regulated security? And he did it out of Singapore. And we have this phrase in the UK, the operation was a complete success, but the patient died. Right, and he would say all the tech was great, it all worked, but there were 2 things missing. One was institutional participation, because at the time there wasn't really much regulatory clarity in this space, and the other was distribution. Most importantly, distribution. Can you connect hundreds of thousands of investors to tens of thousands of assets? And that led to the vision of Ownera, and the vision of Ownera is to open up institutional rails distribution for the digital asset securities market. So we sit as these very thin layer, these rails, and we work with a lot of fantastic companies like the ones that are here on the platform who are either tokenizing digital securities, or they got investors as well because they're exchanges, or maybe they're just representing issuers. They may be distributors with pools of investors investors, generally accredited investors, and we provide the distribution rails that enables those investors to have one wallet and to see digital securities from wherever they are, all over the world, whatever blockchain tech these great companies are doing this on, be able to invest in them, trade them, and pledge them as collateral. Was that 2 minutes?
It's pretty good, and you also got a recent round of investment too, right? That was
smart. We recently closed a Series A, 20 million, and our headline investor was JP Morgan. So that after that, before that, we used to have to explain who Ownera was. More and more the conversations we have, people go, oh, we've heard of Ownera.
very good. Way to come in under budget as well. So next to me is my old and good friend, Dan Doney, the CEO of Securities. Dan, why don't you tell us a little bit about you and your team?
Yeah, thanks, Dave. So Securities is a blockchain financial service infrastructure company, and we work with the likes of these folks. And our target market is institutional financial players. So we have as customers State Street, US Bank, asset managers like WisdomTree, and others. We work with them to help them retool their core infrastructure to work with blockchain tools. And the main focus is institutional grade compliance that can scale across financial entities.
Again, thank you very much for the concise comments. And Arie Trouw of XY Labs, why don't you tell everyone about the kind of dual nature of XY and what you're doing in this space?
XY Labs, I'm the founder of XY Labs, but I'm also the co-founder of XYO Network, and people often don't know what the difference is. So XY Labs is a traditional company. It's a C Corp. It's in the United States here, and the XYO Network is the cryptographic technology which we use to do some of the cool things which we do in apps like Coin, for example. We have two tokens. We actually have a token which is our XYO token, which is a utility token that runs on our network, and then we also have XYLB token, or that's our stock symbol effectively, because we're tokenized on T0. So we kind of bridge this gap both in our technology and our products between Web 2 and Web 3. And we also, from a finance standpoint, kind of bridge the traditional to the untraditional, where we have a traditional C Corp and stock. And we did a Regulation A about 2017 or 2018. So we've done the Regulation A thing. We've done an ICO. We're filing semi-annually with the SEC, so we're a very transparent company. So we kind of bridge this Web 2, Web 3 world, not only on technology and products, but also on the business structure and business aspect of it.
Yeah, and XY actually, in partnership with my company and T0, who's not here, launched the largest direct listing of a tokenized equity in September, and that was about 24,000 investors in their project. And so, if you're interested in understanding how you can take your private company and make it tradable, you should talk to Arie after this.
Or talk to Dave, because you guys are the glue that basically glues us to T0.
Thank you. It was fun to glue those things together. Next, Daniel Coheur of Tokeny. Tell us a little bit about yourself.
Hello, everyone. So Tokeny is a company based in Luxembourg. We're a team of 50 people. What we have developed for the last 5 years is a compliance framework aimed at financial institutions that require compliance to enable to represent financial instruments on the public blockchain in a compliant way. And how we do that, we have developed a standard called the ERC 3643 that is linking a compliance token on the basis of an ERC20 token with an identity standard that allows to whitelist identity and not wallet, because wallet are not compliant, and therefore also to implement some recovery mechanism. We have close to 100 customers. We have tokenized 28 billion of assets so far, and we are backed by Euronext, which is the largest exchange in Europe, and by Apex, and we are going to bring for them around 1,000 billion, so 1 trillion of assets in the next 3 years on our platform. And we do that for other financial institutions as well.
Super impressive. Now, Sam Grossman, tell us about yourself and your firm, Inveniam.
Sam Grossman. I am the managing director of real estate solutions at Inveniam. Inveniam is a data operating system for private market assets. We like to say that we are the who The why is transparency. The how is better data creates better value, which allows you to make better decisions. Or Inveniam it if you follow me on LinkedIn. And that's it, because I want to make sure I stay on time, Dave.
You're not in the doghouse. Good job. So, Anthony, we've all been at this for years now. You take a look on Twitter, you see how it started, how it's going, kind of memes. What's changed at Ownera, and like since you guys founded it, and what have you learned since then?
I think the most important lesson was actually at the formation of Ownera, which is the one I described a minute ago, the recognition that you needed institution engagement and distribution. So we started 3 years ago, and we decided to take a very open approach, right? We think this is not a space for like walled gardens where people build vertically integrated solutions. So we work very hard one thing is to have amazing technology, which obviously we have, but almost harder is to bring the industry together to get buy-in, to enable us all to share in this potentially massive prize of tens of billions of dollars of tokenizing real-world assets. So we work very hard with all the people here and with the broader industry, both TradFi and crypto, to bring them together. In terms of the timeline of that over the last 3 years, I have to say it's unfolding pretty much as we planned in our cunning plan. It's been great. In fact, actually, this is going to sound terrible, but almost we couldn't have brought the industry together so fast if it wasn't for what happened with COVID and lockdown. And that may sound a terrible thing to say, but for the last 2 years, and as many of these people know, we convene an industry group. I chair a not-for-profit group every 4 or 6 weeks, doing a big in-person event at Digital Asset Week London in 2 weeks' time. And that now comprises over 80 institutions, and all sit on Zoom, and they all come into my living room. And what we've been able to do is start to bring the support and buy-in for opening up these distribution rails, and they're peer-to-peer decentralized distribution rails, so you can connect people who got assets to people who have investors at an institutional level. So it's kind of unfolding where we wanted it to go so far. Am I allowed to get away with saying that?
Yeah, very well done. Arie, you all started XY, around 2018 or so, something like that?
Well, XYO was 2018. XY Labs, the company, was 2012.
Yeah, and so what's changed for you since you got this started, and how did it evolve?
A lot of things changed, of course. One of the big things for us was when we first, wrote our white paper for our protocol and dreamt this whole thing up. A lot of assumptions were made. Like, for example, Ethereum is going to get really fast and really cheap, really soon, was one of our assumptions. I think a lot of people had that assumption. And then it turned out it was the exact opposite. It's going to take a long time, and it's going to get slow and expensive for the duration there. And so relying on like layer one protocols to be the data store and the way that people use our protocol was something which we had to pivot on. And I think that actually helped us in many ways, because realizing that the future of cryptography and the future of these sorts of blockchains in many ways really rely on like self-sovereign data and zero-knowledge proofs and things which don't require consensus or don't have the side effect of performance and cost issues which those do. So those are very difficult to obviously innovate around, but I think as we progress and leave consensus and some of those things for the things that it's good at, and then use the breadth of technologies from blockchain to do other things in a much more efficient way, I think we got that hard reality check early on that a $50 transaction for each thing a person wants to do is too expensive.
Yeah, the cost of Ethereum gas definitely influenced some of our decisions and architecturally, because when it started costing hundreds and sometimes $500, $600, $700 to move tokens around or to do a confirmation, it really hurt a lot of businesses, especially ones where margins were thin. And we're in the securities trading business, and can you imagine on E-Trade paying $500 to sell $1,000 of stock? And so we found the same thing. We had to architect around it. Danielle, you've also you work on the Ethereum blockchain, so I'm sure that that's a concern of yours. But what's changed for you since you got started?
We got customers. No, but truly, customers are changing everything. When you are a PowerPoint company, you don't have to deal with customers on a daily basis, so you don't see, the problems that they are facing that you then need to fix. And indeed, you were talking Ethereum. One thing, for instance, that we spent like almost a year was redeveloping a blockchain indexer. Blockchain indexer is what scans the blockchain that enables you to store the transaction in your database and provide instant reporting to your client. We were using an open source solution from the graph, and we started to have volumes, and obviously we had problem. It was not indexing properly, we had reporting problems. So what changed for us is the moment you start to have customers, it changed your priority. It changed also your value proposition. You start refining it to really understand what is your positioning. In the beginning, we were working with single issuers, so we had to build this all onboarding, qualification, servicing. We built a bulletin board. We built a whole full of list of services to meet those single issuer customers or multi-issuer customers. Now, as we have larger customers, institutional customers, we start to refine our positioning, and at the end of the day, what we want to be is a kind of middleware between business application and the infrastructure that is the blockchain, and service that very specific type type of client, type of needs, and be that middleware. So having customers, change everything.
It's amazing how that happens, isn't it? Right?
Yeah, it's, you don't sleep anymore. It's terrible.
Yeah. Clients are the bane of our existence. Sam, you guys have definitely changed a lot in the last 5 years.
Yeah, what's sleep, Daniel? It's this thing I hear about. No, listen, things have changed. 2 years ago, we were at your conference in Austin, and we're up here talking about education, about this concept called tokenization. And half the crowd was looking like a deer in the headlights. Now here we are talking about things that have been tokenized. It's here. It's no longer a pipe dream. Everyone who's up here had the dream. It's been realized. It really is a matter of how big can this get and how fast is it going to get there. The things that have changed is that, we had to build it first. Well, it's built now, and now we need the distribution. And, I'd say that's the change. We're no longer, pitching about a concept. We're now talking about what we're going to charge for it.
Yeah, and I built our original tokenization platform in 2015, and showed how you could tokenize leases. That was the first project, and produce dividend-paying currencies based off of the leases. And then we moved to mortgages, and then later that year we showed how you could do it with insurance. And I thought, wow, we could be AIG and Goldman Sachs, and we're going to be there next year. So we were keen on tokenization, but it turns out that wasn't the real challenge. It's easy to tokenize things. But blockchain rails are global in nature, and these assets then move across jurisdictional boundaries. So we took on, and if I had known it was as hard as it was, the challenge of how you can codify and enforce global regulations to automate pre-trade compliance and create a global liquidity pool. That was a crusade that I figured would take 6 months, just like building the tokenization platform. It took 4 years. But in the process, we found that our real clients were major institutions who actually operate across jurisdictional boundaries. And what's changed over the past couple years is at first they were confused and reluctant. Now they're eager participants. I think to a major institutional player, they all recognize that if they don't retool their infrastructure, they are yesterday. And they all see that in the next 10 years, every one of them, they have to adopt these new technologies. So it's a matter of moving them through the process, but it's coming, and they're confident of it.
Yeah, it's pretty incredible. I think a lot of us, when we got started, we were working with smaller clients and smaller opportunities. And when you're building deep fintech, none of us operate in a silo. None of us operate in a vacuum. We all have to work together, and it's a really interesting thing. It's one of the most interesting industries I've been involved in my career, because it's being built in parallel, collaboratively, by different companies, all kind of with a goal towards this distribution concept, the connectivity. It's super cool. Arie, crypto is widely misunderstood by still 12 years, 13 years in. People thinking about Bitcoin as a form of payment, that's still a dream. Ethereum, is it a security or not? Celsius is a safe place to put your money. What do people get wrong about digital asset securities or security tokens and regulated digital assets, or just basically, what don't people quite understand that you've learned?
I think the biggest thing people don't understand is kind of what you're saying there. They read the Bitcoin white paper, and then they have a hammer that makes everything look like a nail, and then they generalize, and it's human nature. This is what drives a lot of behaviors for humans, where it's easier to think of something if you simplify it. And so they make this big paintbrush, and they say, okay, well, everything which is crypto must be a currency, or it must have a shared ledger, or it must have consensus, and a lot of, especially people who are not very familiar with the space, which sometimes are the regulators or the lawmakers, they get a very narrow view of it, because it's easier for them to read one paper or talk about one thing and then just try to paint that paintbrush across everything. But then if you look at what's happened in the last probably 3 or 4 years, the amount of breadth and depth that's developed in the blockchain space, and I often try to use the word blockchain as opposed to crypto, because people conflate those two a lot. And there's a lot of things you can do with blockchain that doesn't require consensus or a shared ledger necessarily, and it can provide a bunch of benefits, and that's also what drives the differentiation in securities. Is this a security, is it a utility token? But there's just so many different things, but it gets really, really complicated. So if you're going to ask a lawmaker who their primary business is not crypto, to go and think about how to actually make these rules or laws, it's really difficult for them to consume that complex of a set of things. So they want to make one box to put it all in, and they make one set of rules for that one box, which is understandable. But I think it's the big paintbrush eventually has to become a bunch of little paintbrushes.
Daniel, what's everyone wrong about?
Okay, so let me ask you, the audience, a question. Is Excelizing your security means that your security is now a different asset class, right? It's stupid as a question, right? So is tokenizing your security means that your security is now a different asset class? Of course not. And we're still debating about that. A token is just a representation of a security on another infrastructure that is more performing. That doesn't mean that your security is a new asset class. It means that as a security, you need to make sure that you are going to respect the rules of compliance associated with that security. And that's it. So everybody can make token tomorrow. Just make sure that you follow security law. That's it.
I don't know how I followed that one up, but the differentiation that was made before, the blockchain versus crypto, I really make a point to not even use the C word, because it's really not, it's not necessary, at least in the blockchain real estate world that I live in. Tokenization is not, Bitcoin buying real estate, and hopefully it never will be. But that's the biggest mistake I think people make. And the second one is, when you tokenize an asset, it's an option. It provides optionality, liquidity optionality. You don't have to sell that token. You're not really changing your cap stack by tokenizing a piece of real estate. What you're doing is you're creating optionality to your LP unit owners or the debt or whatever you're tokenizing. I think that's the other fear that people have. Everyone fears what they don't know. And so we continue to try to educate them on that. But the point that it's an option, I think, that it provides optionality, that you're not changing anything. You're not changing the asset class. It's still a multifamily building. It still has LP investors. It still has a GP. It's operating agreement, subscription agreement, yada, yada, yada.
I think what people can lose track of is what's the problem we're trying to solve. What is the business requirement, for want of a better word, right? And the existing financial services industry, there's a lot that's kind of broken around it in the way it works, or it's the product of 30 or 40 years of people sort of solid sticking tape and trying to make this environment work. It's very complex. You have many intermediaries. You have complex process of clearing and settlement and counterparty risk and all these horrible things. What we're trying to do here is actually have a world in which you can execute a securities transaction between two parties without unnecessary intermediaries. If they're adding value in the process, great, but if they're not, it doesn't need to be there. And you're trying to orchestrate a securities transaction where you can have an investor who asserts their ownership over the record of ownership of a security in real time, and you orchestrate and you settle that transaction in real time. And if you have that security and you want to sell it, you as an investor should be able to post a sell intent, have another investor buy it, and maybe you've bought a bit of real estate and you don't want to sell it because it's a tax event. So you want to be able to take that piece of real estate and say, I want to borrow against the slice of this building that I bought. And people should be able to, whoever should be able to come and say, I'll lend against that, right? And these are kind of the business requirements, and people either get lost on the crypto side, I feel, with putting the tech first, or they get lost on the traditional finance side by saying, how do we take what we've got, all this spaghetti, and start untangling the spaghetti, right? If you focus on the prize, it's basically digital securities. How can you transact and orchestrate those transactions and settle them in real time? Boom, you press to invest in SpaceX, you own SpaceX, it's settled, it's done.
So a little over a year ago today, there was more than $3 trillion worth of assets riding on blockchain rails. And today, there's just under $1 trillion. So we've lost roughly 66% of the value of assets on blockchain. The reason for this, it wasn't the Russia conflict, it was the UST or Terra Luna incident, which set off a whole series of other events that led to a massive sell-off in the blockchain world. So there are still holdouts out there who think regulation is not beneficial to the industry, but the bottom line is as long as you allow bad apples, you will spoil the batch. So I think increasingly people are coming to realize that regulation is actually beneficial to the space. Now, here's what most people get wrong. It doesn't take away the benefits of blockchain. So you still have the concept of decentralized transactions, easy access to wallets, mechanisms by which you can operate your value and self-custody your value. So all of these things still exist, and you get the benefits of instant settlement, which the legacy world can't compete with. So many folks misunderstand that regulation doesn't need to hold things up. It can actually help things. And actually, because of blockchain and smart contracts, you can actually automate regulatory enforcement, making it efficient and easy for folks to use.
Yeah, I'll add something in here. I think that if you put this group together, or if you'd been at some of these conferences, and this is the fourth year I've done this conference on this topic. Security token offerings, digital asset securities are horrendous for initial capital fundraises. There's this whole thing that a lot of you folks probably still use the word STO. That's one of the worst ideas that ever came up. It absolutely killed this industry for a while. It held us back. These objects, which are created through this process of tokenization, they make it somewhat easier to trade private assets, especially regulated assets. It doesn't make it easier to raise money, and there's really no point in minting a token for a securities offering and selling it to people, because you're not going to trade or transfer that thing for years. Like, what's the point of selling it initially as a token. You can tokenize later if you want to make it tradable. And that's like one of our key learnings. We just saw so many, mostly the worst projects that are uninvestable, couldn't raise. They came into this industry and they actually hurt the reputation of this industry when in fact it doesn't, this technology does not help you raise money. It does help with distribution. It does help with settlement. It does help with secondary trading. And it's amazing for record keeping. It makes a much better ledger of shareholders, much better record system, but it does not make a better fundraising system. So I'm happy to talk to you about this if you still think that this is a great way to raise money, but it's not an ICO. And a lot of folks came and thought, oh, these are ICOs for securities, and it doesn't work that way. At least that's what I found, 100%. So moving on, Sam, Mike Tyson, and he knows a lot about this, famously said, everyone has a plan until they get punched in the face. Now, you're making a face right now. I'm not sure what that means. But, what's changed, as you've encountered the market and you're out here all the time talking to folks about the way that you go to market now versus a couple of years ago?
Yeah, it's things there are changing. I think I call it unintended consequences. We came up with a technology to do something, and as you get more clients and you get more users, and you figure out that it can actually do other things, and you adapt along the way. I believe that's called innovation. But what really helps that in this ecosystem is that, Dave mentioned it before, it's a stay in your lane ecosystem, meaning we get what we do, and we think we do what we do really good, right? Data, better value. We don't want to issue tokens because that's what Daniel does really good. Distribution, like Ownera. This whole thing, this whole concept of an industry and an ecosystem being with so-called competitors on a stage, in a room, talking about innovation, talking about how can we help you do better. It sounds corny, but it's true. I never in my career, which is a little bit younger than the rest of the guys out here. Sorry, I had to say it. But I've never seen anything like it. I've been in real estate for 35 years. It's a rat race. It's one of the most competitive industries I've ever seen. No matter what the city, no matter what the town, no matter what the asset class, it is cutthroat. And to be involved in this ecosystem with these brilliant people and just continue to innovate on a daily basis, it's amazing. Is this one we have? Yeah.
There is a really cool thing happening right now, right? Which is that to take out or transform the financial services industry, that's quite a big thing to do. And what you're finding is that the only competition we have in this space is the ability to do that. And so you're seeing lots of fintechs, lots of smaller companies. 5-6 years ago, you had the biggest institutions in the world thinking, how will we collaborate with fintechs? And what's quietly happened is all the fintechs have gone off, started collaborating with one another. Right? There is no competition actually in this space. You've got people here who, in the domain they're in, they're competitors, right, on paper. But the big prize is, the only competition is can we or can we not open up distribution at a global level for this industry? If we can, everybody here will win in spades, right? It's not, there's enough space for everybody. Maybe in 10 years' time, when everybody is, unicorns and multi-billion-dollar valuation, then they'll start competing a bit more. But in the meantime, it's about fintechs plugging into one another with our APIs, each taking out a different bit of the value chain of financial services, and that's how you really transform this industry.
we've got just a couple of minutes here, and I want to give everyone here an opportunity to differentiate. I think it was very well said that, you know, we do co-opetition around here, but we mostly we intend to work together. That's the way this thing works. We don't want to see anyone fail. Let's go through across this way. Who's your ideal customer? If someone out here in the audience, like who should be working with Securities?
We work with the major banks. So State Street being the largest custodial bank, US Bank being the largest payments bank. Those are our partners. WisdomTree being a clever asset manager in the space. We just received SEC approval a month ago for WisdomTree's fund. It's a treasury-backed fund.
That's a really big deal. Congrats.
Really, really big deal for the tokenized space. It took more than 2 years to get through the SEC approval process. It was an affirmative statement by the SEC that they support this model. And what it opens the door for is any 40 Act fund being offered in tokenized form. So those are our customers. We help them bring their offerings into the market. The important part of that offering is it's available not just to accredited investors, but to all investors. And this allows parties who can now blend their banking experience, their payment experience, their investing experience with these assets, which operate 24/7 and can easily convert between cash and other positions conveniently. So those are our targets, and we found that they can appreciate, they need to appreciate. They know their businesses are changing and they need to use these tools.
Okay, so as these distribution rails in the middle, our customers are not the assets, the issuers, or the investors actually. Our customers are the regulated institutions, the regulated distribution network that are either bringing assets representing issuers, whether they're digital transfer agents, issuing agents, and whether they're distributors, whether they're just got the pools of investors, private banks, wealth managers, etc., whether they're exchanges that want to hang on this network and have assets and investors. So at Ownera, we kind of, there's fantastic clients like people around here who are tokenizing assets that can move really fast, and we're going to production now with them. So we've got, you know, commercial real estate, etc. And we also work with the biggest asset managers, investment banks, private banks, etc., who take a little bit longer, and ultimately they will be opening up distribution globally.
Who works with XY?
XY? Well, we're kind of like everything else, we're a Jekyll and Hyde company there as well. We have both the B2B and the B2C side of our company. So the B2C side, we have like our Coin app, for example, has millions of users. They generate data for us. They do tasks for us. They enjoy using it. And almost most importantly to me is they get introduced into crypto. A lot of the people who are using Coin are, I've heard this C word, as you said, before from my friends and everything, and then we help them get on there without too much friction or too much risk for them. So I think we've introduced a lot of people to what blockchain can do on that one side. But on the other side, the B2B side, we have a bunch of customers of people who want to gather data, use data, store data, make their data more permanent, for example, or self-sovereign. So like replacing APIs or traditional APIs with blockchain-based APIs that can be used from both Web 2 or Web 3. So we have kind of both those customer edges, and we, to some degree, bring them together in the middle, because the businesses utilize the work or the data which the consumers provide for them. So our perfect customer is somebody who likes crypto or likes blockchain and the idea, and then wants to share that data on the one side.
Our ideal customer is the one that understands that once you represented these assets on the blockchain, what you have is a highly performing data-rich instruments that you can use for many services. What I realized in the last years, and everybody's talking about tokenization and do not understand what tokenization is about. We've been spending 5 years to do that. Tokenization is not about taking an RC20 and blocking this into your wallet. I mean, you can have Google Drive for doing that. But if you really understand that your assets can start circulating, on this decentralized infrastructure and start to be enriched and be more performing, you need a solution that enables you to enforce compliance. And that is not trivial. You can have an NFT that costs $10. You can have the RC20 that costs $10 as well. But that's not going to bring you any far. It's like having a Ferrari without wheel. So what do you want to do with it? That's the key.
You know, anyone who owns or touches an asset that has underlying data, that actually cares about transparency, that wants to verify their data, that wants a better way and a more efficient way of communicating what that data actually says, and wants to action and make it observable for whoever wants to see it, how they want to see it, when they want to see it. You know, the other thing that I just wanted to mention is, you know, the real estate industry, although it may be the backbone of the economy, it's probably one of the most inefficient industries that there are. There's more pain points and friction involved in this industry than any other. And what we're talking about up here is reducing that friction. What we're talking about up here is one of the largest industries, the most wealthy industries, the most money transfer that happens, and making it more efficient and making it more decentralized, making it open to everyone. The thought that for $1,000 you can own a piece of a skyscraper in Manhattan, or vice versa, you know, a guy in Manhattan can own a piece of a yacht club or marina in Santa Monica. So decentralization of the world as we know it, and making real estate and other industries frictionless.
In my company, Vertalo, we're a digital transfer agent, and what we do is we help transform illiquid private assets into tradable and transferable digital asset securities. What does that mean? Well, if you own a company or an asset which is hard to fractionalize, hard to sell, not marketable, we transform the ownership ledger and make it easier to get secondary liquidity from that. And part of that is working with folks here on the stage, folks who are not here, and it's a whole ecosystem of providers, but mostly it's actually enabling the sale, the purchase, and the collateralization of private assets on private trading platforms. These are things like alternative trading systems. This is non-public, not exchanges. And this is a lot of kind of what we all do here. What we're doing is we are taking assets collectively. This group here takes assets that were immune to marketability, and we're transforming them and making them marketable. And this market that we operate in is 3 times the size of the public markets, 3 million times the size of the crypto markets. It's so huge, and that's why it's taken so long for us to get to where we are. So I'm sure everyone here would love to take your questions, but we've come to the end, and we appreciate your time and attention. I know it's been a long day. Thank you very much. Please, a round of applause for the panelists.
Good job, Dave.